as well. Let's get in some perspective from Axis Securities. Rajesh, Head Technical and Derivative Research at Axis Securities, is now joining us. Rajesh, first can you just talk about what's happening in the market? When you look at some of the F&O names, there seem to be extreme pressure, and this is a classical case that as liquidity would dry up, stocks would tend to correct much more.
Yeah, good afternoon. Yeah, if you look at the last few days move of the Nifty, the Nifty is, holding up around, 10,500, 10,600 level. But if you look at the stock specific front, very few select stocks are, holding up the ground on the higher side, like name like Infosys, HDFC Bank, Reliance, M&M. These kind of stocks are holding up the ground on the higher side. But if you look at the overall market bet, the market bet is very negative, and we are seeing selling pressure are there, other stocks. And whenever we are seeing any kind of pullback action, on the higher side, that there is a supply pressure. So overall, if you look at the index is holding up, and we feel that index is likely to consolidate further more in the range of 10,500 to 10,800. This could be the possible band we can see for the index for few more trading session or few more weeks. So until unless will not break on the higher side about 10,800, market is likely to face or market is likely to behave in the same kind of manner, and we'll see only select stocks will try to hold on the higher side. The stocks which are trading near to their all-time high level, or they are above monthly or weekly breakout levels, above their monthly and weekly breakout levels, above that levels. So very few stocks are holding up the ground. Overall, the structure is looking weak, and at the current juncture, the right strategy would be whenever you see any kind of pullback action is a shorting opportunity in the market till we not crosses this 10,800 level on the higher side.
Also, look at some group stocks that are falling in, and India Bulls come on the top of the mind. Remember when it started to go up, it went up in such a way, and now when it's going down, you're seeing that even the large cap names in the India Bulls stocks are going down. So whether you pull up India Bulls Ventures, housing finance from the highs is down about 21%. India Bulls Real Estate is down 31%, 37% from the recent high. iBull Ventures 20%. Sorrel Holdings, this is a company which did extremely well earlier, is now down about 15 to 20%. So that's the sort of correction that you're seeing into some of these names. So let's actually take this discussion forward. Ajay is now joining us. Ajay. Okay, Ajay will just join us in just a bit. Rajesh, what do you make of some of the high beta names that have suddenly started to fall, suddenly started to see a lot of activity? What's the sense that you get over there?
Yeah, if you look at the overall India Bull pack, the stock which was on the bullish territory was India Bull Housing Finance. But since last few weeks, we have seen that again, stock is facing the selling pressure on the higher side, and now the stock is trading below its support area of 1150 level. So I feel if its stock continues to remain below 1150 level, then we'll see further more supply to come in the stock, and it can go down further towards 1075 or 1060 level on the lower side. Even if you look at the IB Real Estate, it has given a breakdown of its important support area of 174, and now stock is trading below 174 level. So I feel if it continues to remain below 174 level, so India Bull Real Estate can go down further towards 150 or 145 level on the lower side. So looking at the overall India Bull pack, I feel that India Bull Housing Finance as well as the India Bull Real Estate may face further more selling pressure, and it may go both stock can go further down from the current level.
Rajesh, I'm going to ask you to hang on there, because we're going to continue our conversation with you with a specific reference to the mid-cap space. We've been telling you through the show how the broader markets are under immense pressure. The sell-off has only been intensifying since yesterday. Let's invite Ajay Sharma on board. Hi Ajay, look at what's happening with the broader markets. What are most of the experts saying? Is the pain likely to continue this phase of consolidation?
Well, you are being very generous, Nantara. Actually, there's excruciating pain in the mid cap and the small caps, and many fund managers are just licking their wounds out there, the mid cap centric. But that's the nature of the game. Mid caps rally 3-4 times, 5 times, 10 times also in a 2-year, 3-year period in a bull kind of a phase, and a bear phase they erode 40-50%, and that's exactly what is happening right now. Last 4 weeks, combination of factors are leading to value erosion. The SEBI's latest ASM stock list has also spooked traders, as if indicating that these are the weak stocks, but they are just wanting to limit the speculation happening in a clutch of stocks or a list of stocks, and hence the ASM list. In fact, today I spoke with a lot of PMS fund managers who have already started buying in the market in a staggered manner, knowing that probably further value erosion is possible, but no one really catches the bottom, especially in mid caps where earning trajectory have been very strong, because this correction in the market is treating good quality earnings backed stocks and not so good quality and earnings are lacking kind of stock in the same vein. But now selective buying is actually emerging in a staggered manner. So this fall has lasted almost 6 weeks now and has really forced selling by select HNIs who build positions in mid cap on margin and leverage. That is also one of the reason. Now we understand from institutional side, couple of domestic centric brokerages are selling out their position in mid cap wherever HNIs are not paying upfront margin yet. So these factors are at play. In fact, the graph is not ready. Another thing to watch out for right now is the way the MSCI emerging market index is approaching an inflection point, and historically at that inflection point, if the price takes out that, then a big rally is coming. Now if you look at the market in that context, that a lot of price erosion already happened, who knows, we may be nearing capitulation or nearing a bottom for small caps, mid caps.
Okay, Ajay, thanks a lot for putting all of that in perspective for us as the meltdown that you're seeing in the mid-cap space. And I want to take that conversation, the broader markets forward back again with Rajesh Palviya from Axis Securities. Hi, Rajesh. I told you that we were going to discuss the broader markets with you. Ajay has kind of set up how the charts are looking like at the moment. To say it's a sell-off is putting it very mildly, very conservatively. It's almost as if it's a big meltdown. There had been fears that perhaps the mid-cap space was overvalued. I guess those who believed that were right.
Yeah, if you compare with the main indices with the mid cap and small cap index, we have seen the mid cap index are underperforming since last 3-4 months, and we see that it has given the major breakdown on their short to medium term chart, and we feel that this underperformance is likely to continue on the chart front also, and we'll see this kind of pressure will remain in the mid cap as well as in the small cap index. So if you look at the broader picture of the indices, like only few select stock will likely to hold on the ground, and but the pain is likely to continue on the mid cap as well as on the small cap indexes.
Right, Rajesh, thanks so much for giving us your perspective. Let's carry forward this conversation. Earlier in the day, we spoke to Shiv Puri of TVF Capital, as well as other expert Vinay Khattar from Edelweiss. Let's listen in what they had to talk about this mid-cap correction and what's essentially their view.